Behind the scenes at a car dealership, part 2. The stuff they really don't want you to know. Welcome back to the Homework Guy Show. This is part 2 of our Behind the Scenes at the Car Dealership series. And if you saw part 1, you already know we covered stolen down payments, improperly handled trade-ins, payment packing, marked up interest rates, and silent loan term stretching. But folks, today we're getting into the really ugly stuff, because some of these tactics can financially wreck consumers for years if you don't catch them early.
And once again, most buyers don't even realize these things are happening until after the paperwork is signed and the stress starts kicking in. That's what makes this so dangerous.
Picking up here in part 2 at number 6, rewriting the deal after you leave. This is commonly called yo-yo financing, spot delivery manipulation, or conditional delivery abuse. And here's how it works. The dealership lets the customer take the car home. Everybody celebrates. The buyer thinks the deal is done. Then suddenly, days later, the dealer calls and says financing fell through. The bank changed terms. They need more down payment, or the interest rate suddenly went up.
And by that point, the customer is emotionally attached to the vehicle. They've driven it to work, their kids have ridden in it, their friends have seen it, and the dealership now has all the leverage.
Exactly, and consumers become far more vulnerable once emotional attachment kicks in. That's why buyers should never assume a deal is finalized until financing is truly complete.
If this happened to you, give us a call at the Homework Guy. Number 7, back-end product cancellation games. This one quietly costs customers thousands too. A buyer later decides to cancel an extended warranty or the gap coverage, maintenance plans, or other back-end products. Sounds simple, right? Not always. Some dealerships delay the cancellation or forget to process it, apply the refund incorrectly, or fail to reduce the loan principal afterward.
And friends, if you decide to cancel that stuff, always reach out to the dealership accounting office. They're much greater help than any finance officer ever will be. And many buyers wrongly assume right here, well, I signed the cancellation form, so it must be handled. Meanwhile, months go by, interest continues accruing, and the refund never properly reduces the balance. That can become a massive financial problem. At number 8, title and registration delays. Some dealerships sit on title paperwork, delay registration filings, mishandle taxes, or fail to pay off trade-ins promptly.
And then suddenly the customer is dealing with expired temp tags, suspended licenses, collection notices, duplicate loan liabilities, and even credit damage.
We've talked before about situations where delayed title transfers become major leverage points in rescission arguments, because when title work isn't handled properly, everything downstream starts falling apart.
At number 9, conditional approval lies. This one happens all the time. The salespeople tell buyers, you're approved, but what they really mean is, we think a lender might approve this. That's a huge difference right there.
That false confidence creates emotional commitment before financing is actually finalized. Consumers start mentally owning the vehicle before the bank is fully committed to the deal. Then later, the terms suddenly change. More money down, higher interest rate, longer term, and now the buyer feels trapped. At number 10, falsifying credit applications. Folks, this one is way bigger than most consumers realize. Some finance offices alter information on credit applications to force lender approval. We're talking about your income, housing payments, job time, expenses, sometimes even employment details, and we've seen dealers add college degrees to people's applications.
And consumers often don't catch it because they're rushed through electronic signatures. Then later, problems start showing up, like refinance denials, loan disputes, repossession issues, and fraud investigations.
And here's the scary part. If false information ends up on a bank application tied to your name, you can end up dealing with the fallout later, even if you didn't intentionally falsify anything. And that's why we constantly tell people, read your credit application before you sign it. Not just the payment sheet, the actual application. And folks, that wraps up part 2 of our Behind the Scenes at a Car Dealership series. The biggest thing we want consumers to understand is this: you are not powerless in a dealership, but you are vulnerable if you walk in uninformed.
That's why slowing down the process matters, reading paperwork matters, asking questions matters, and walking away absolutely matters.
If this series helped you, hit the thumbs up button, subscribe, and share this with somebody shopping for a vehicle right now. Because the more informed buyers become, the harder it is for bad dealers to keep getting away with this stuff. And if you've experienced any of these situations personally, drop them in the comment section below. We do read them, and trust me, you are definitely not alone. We'll see you on the next episode of the Homework Guy Show.